IT recruitment business. So we'll try and get through the results in about half an hour and leave about 10 minutes at the end for any questions that anyone has. So before we get going, just a little bit about the survey itself. As most of you know, Hayes, we produce an annual salary guide which shows typical salaries paid across a selection of industries and functional areas. We cross-reference them for the level of experience and the type of company that the role is found in. The salaries themselves are based on what we see every day in the roles that we fill and that our clients hire for them, and the candidates that we meet. That's really kind of where all of our data comes from. And it's become an invaluable resource tool for literally thousands of hiring managers across the country, and we're very proud of its simplicity and user-friendliness. If you want a copy of the guide, as Caitlin mentioned, the 2016 salary guide is available on hayes.ca/salary guide. In addition to the guide, we also survey our clients about their hiring plans, salary changes, business activity forecasts, and really just their confidence in the economy as a whole. This year, we've included 5 years of data, and in some instances, or most instances, 5 years of data, and the goal is to show trends in the job market across the country. It kind of puts us in a unique position to see things that others can't, and it allows us to provide valuable advice and recommendations to our clients, but as well to our candidates. So today's webinar is specifically about accounting and finance in Canada, and there's some slides that will give you overall trends in general areas of hiring. This year, the survey was completed by 3,500 hiring managers, all Canadian, and their HR professionals and business leaders from across the country. We're covering about 16 different industries and sectors, or 20 different functional areas. So I'll pull out regional and industry differences, different variances as we go along to show you different comparisons. So Canada's job market, I'll start with the headlines. Corporate Canada's confidence in the economic stability is more conservative than it has been in past years. Despite market concerns, business activity forecasts remain consistent with previous years, and that's outside of Alberta. Employers are increasing their salaries at a slow rate, although they're willing to alter salaries to attract talent. And its succession planning is no longer a nice-to-have. Looking at the IT job market itself, IT employers share similar expectations for economic outlook as the rest of corporate Canada. IT plans for business activity are above the national average, which is good to see for everyone on the call today. Plans for salary level increases have flattened, but they're in line with the 2015 actual increases. And hiring plans are more optimistic than overall rates, with almost half of IT employers planning to hire. Now, as you can imagine, there's kind of varying degrees of confidence, but we'll start with the feelings about the economy in general and whether people believe it will strengthen, weaken, or remain the same. So last year, we saw the positives outweigh the neutrals for the first time in many years. This year, unfortunately, it's flipped back again, and by a margin that's greater than any time in the last 4 years. 50% of people believe that the economy will remain static in 2016, and around the same proportion believe it will improve, as there are people who believe it will weaken. That's around the mid-20% range. So why the change? Well, the headline for the Canadian economy in the last 12 months has been oil prices, and more oil prices. When we conducted the survey last year, the price of the barrel was still over $60, and we hadn't seen a change in confidence. But now at around $40, I think I actually saw it dip into the 36s today, it's a completely different story. So how much of an influence is oil price and the Alberta economy having on the overall story? We'll take a closer look at that in a moment, but first let's take a look at how IT expects 2016 to go. Looking at the same question, but only for the IT function, you can see a fairly similar sentiment, although they are slightly more optimistic. If we look at the same question and we break the results down into BC, Alberta, and Ontario, you can see a marked difference between them. So I'll start at the bottom with Alberta, which was previously the most confident province, has become the least. In 2015, we had 60% of respondents believing that the economy would strengthen in the coming year, and that has now dropped to 15%. 50% in Alberta are now believing, or perhaps I should say hoping, that the economy will remain static for the coming 12 months. But a very significant number, around 40%, believe things will get worse for the Canadian economy in the coming year. Now, if we go to BC, who is at the top there, it's a very different story. 35% believe the economy will strengthen, and only 15% are saying it's going to get worse. Ontario, it's kind of similar, with around 30% saying it will improve, and around 15% saying it will get worse. So despite the fact the question was about the economy in general, not which province, the confidence levels clearly indicate where the respondents were sitting. So how about what's happening with business activity levels? Now, let me explain this slide. The shaded lines are what the expectation was for that year, and the solid color lines are what actually happened that year. We have a couple more slides that look like this, so try and stay along. There's two clear things to highlight from this slide. Number one is, despite the fact that confidence in the general economy has dropped, we can see that the majority of employers, 60%, believe that business activity levels will improve in the coming year. In other words, the economy isn't great, but we'll be just fine. Now, secondly, if you look at 2015, 70% of people said they expect to see business activity levels increase, but in reality, less than 50% actually saw that come to pass. So generally speaking, there are less companies seeing better years than expected, but it kind of makes sense because people are generally optimistic. Now, the thing about 2015, though, was the size of the difference. It was over 20 points, when usually the difference that we're seeing is around 5 points. So what does this mean for 2016? Well, we have 60% saying they expect improvements. Now, let's see next year whether the reality is 55%, which would be that traditional kind of 5-point gap, or a much more worrying 40%, which would obviously be the 20-point gap that we saw in 2015. So again, for this to kind of mean anything, given what's going on in Alberta, you really have to break it down regionally. So looking at the IT-specific results, you can see that last year's actual results compared with the predicted outcomes show that the IT function was affected by the overall economic changes. Pretty much expected, but not drastically, as many other functions or industries were hit. So less than 10% expect activity to decrease next year, and we're still seeing almost 2/3 predict increasing business activity. I'll start with BC. So BC, pretty positive overall. 55% saw increases last year, and almost 70% are expecting an increase in 2016. In Ontario, very similar, 50% saw an increase last year, and nearly 70% are expecting an increase in 2016. However, Alberta, I hate to keep picking on you, but again, it's very different. Over 50% saw a decrease last year, and only 35% are expecting an improvement in 2016, which we know from previous slides will convert into less than what we're expecting. We wanted to kind of get a look at the whole oil and gas question and decided the best way to do it was to just ask. So we asked whether, as a result of the oil and gas downturn, do you plan to slow or delay projects or business activity in the coming 6 to 12 months? Only 20% of respondents said yes, and I would suggest most of those were from Alberta, so the vast majority of employers are saying they're unaffected. We also asked them what they felt would be the best performing industry sectors in the coming year, and banking and IT came out on top, which matches up with the reality that we showed on the previous slide. Now, recruitment is obviously kind of our thing and really where we provide the most value to you, the listeners. We'll start with taking a look at the permanent headcount plans first. So for the last 3 years, the expectations and reality have been remarkably similar. Generally speaking, people tend to be optimistic at the start of the year, so there's always some sort of gap by the end of the year between expectation and reality. In 2016, we've got slightly more people saying they plan to hold steady in 2015, with over 50% saying that, and 35% saying they actually expect to increase permanent headcount, which honestly is still a very, very healthy number and relatively similar to previous years. Overall, it's consistent, it's pretty conservative, but bear in mind that we saw confidence levels dropping in earlier slides, so it'll be very interesting this time next year to see if these expectations were actually met. Comparing that to the IT results, and we can see that expectations are similar to last year's actual results, but a bit more optimistic that headcounts will remain steady rather than decreasing any further. So how about kind of the variances by region on hiring plans? If we look at BC and Ontario first, we have a pretty impressive level of consistency. In BC, around 40% growing and 40% staying the same every year for 3 years. Expectation for 2016 is slightly higher on both grow and stay the same and lower on reducing permanent headcount. But my guess would be that by the time the year is done, we'll see virtually the same as previous years. It's a similar pattern in Ontario, slightly more conservative than BC in past years, but the same level of consistency for 3 years in a row. So we've got 45% holding steady, 35% growing, and the expectations for 2016, for the same reasons I just mentioned, it looks to be virtually the same. Now, it's an about turn for Alberta, though. You've got almost 50% who saw a reduction in perm headcount in 2015, and 55% expecting the same again in 2016. So what actually happens in Alberta probably depends on what happens with the price of oil, but we'll see. Now, looking at temporary, or for the IT market, contract hiring, and really this looks like things will remain the same as previous years. The vast majority of companies, so over 60%, are saying they will hold their use of contract headcount steady, and around 20% of companies are planning to accelerate that contract headcount growth. The IT function is one of the few areas where increases in contract staffing has turned out to be higher than predicted, and expectations for next year is looking similar. So contract staff is obviously very common in IT, and IT managers or CIOs, kind of use of contractors, is much more targeted and sophisticated than some of the other functions that typically you see kind of temporary workers used in. They're more brought in to, fill specific projects rather than cover a sick leave or a vacation. Skill shortages kind of been at the forefront of Canada for 5-10 years now. So we'll take a little bit of a closer look at how that's coming along. It's been kind of out of the media in the last 6 to 12 months, and this is probably because of the attention on oil patch jobs that the market has kind of taken a closer look at, and it's really kind of resulting in a general cooling of the economy on its own. However, I can assure you that the problem has not gone away. It's just kind of keeping a lower profile. So our view is that there is a clear shortage of highly skilled people in specific areas. Like I've just listed, if you're an employer in the technology sector, try telling an IT manager that there's no shortage of mobile web developers or application developers or security experts, because I can guarantee you that there is. But at the same time, there's clearly a challenge to find work if you are unskilled or kind of at an entry level. So both points are very, very true. It's just completely different situations. But in any event, we asked whether Canada suffers from a skill shortage, and 56% of IT respondents believe this to be true. It was 61% overall. And then we asked whether your own industry is affected by a skill shortage, and 68% believe that this is the case. Now, it's an interesting and consistent pattern where respondents tell us the skill shortage in their industry or function is worse than the actual skill shortage really is. So we asked, what do you think are the main reasons contributing to this skill shortage? And by far and away, the biggest reason at 38% and 24% respectively were a lack of training and professional development, and secondly, a lack of people entering the industry. So it's all the same as last year, kind of unsurprisingly, but what it kind of highlights is that the problem is not going away. So an update, the lack of skilled candidates has an effect on organizations. We wanted to find out more about this and find out specifically kind of what are the effects that it's having. So 36% of employers said that the skills shortage was affecting their own business activity levels, or at least it was holding them back from growing. And how is it affecting business activity? 42% are saying it's affecting productivity directly. Now, it's interesting because on the one hand, you have employers trying to improve productivity by not adding to permanent headcount, and at the same time, saying that productivity is being negatively affected by not being able to hire the right people, and therein lies the skills gap. There is a clear gap between the skills that are required and the available IT workers that are on the market. So what effect is the skills shortage having within companies and on their existing staff? Around 30% say it is causing increased stress leaves. Just over 30% are saying that they're seeing reduced levels of office morale, and then a dominant proportion are growing over last year, saying 60% this is causing inefficiencies in the entire organization as a whole. And we all know when IT suffers, you'll start to see the entire kind of productivity and speed of the network and everyone's productivity get hit in all areas of your business. So the point is that companies are trying to do more with the same people, and while it's an attractive business case, it's definitely a health warning. So what are employers doing to respond to the issue? The most popular remedy in IT is to hire contractors. It's higher in this function than in any others, and it's followed by changing processes and organizational structure, which kind of makes sense. However, a sustainable business requires development and promotion, but less than 10% of employers that we're seeing are actually using a succession as a solution to the skills shortage. And I'll come back to this in a little bit because the topic of succession plans is something that we all need to take a closer look at. We asked what level of pressure employers felt their people were under due to a shortage of skills in certain areas, and 39% said their staff are under high to extremely high pressure because of not being able to find the right people for the job. So finally, what can you do a better job at for attracting the very niche and very hard to find skill sets? Well, we asked, how are you making your company attractive to top talent? And IT employers said that offering competitive salaries was number one, followed by promoting company culture in the third spot, and offering really kind of competitive, kind of out there benefits packages. Now, the least popular tactic when it comes to attraction is promoting career progression. We also asked what were the biggest contributing factors to losing people, and the second biggest reason was career progression. So salary levels top the factor here, so don't think you can't be competitive, but only one employer can offer the biggest paycheck. So it's important to definitely pay well, but finding a way to have your staff grow internally appears to be more important, and you've got 75% of employers say they don't even have a succession plan in place right now. A little bit alarming. And we know for a fact that what most people want, and that's IT and non-IT, is career progression. And sometimes this has nothing to do with compensation at all. It's just finding new things to do or new technologies to play with, and it's really just new challenges. So our advice is to figure out how you can challenge the best people on your team and also to promote that idea of career progression, just the fact that it's available in your company. So we're often asked, like, how do I promote my succession plan? Because it's confidential. And it's a good point. You don't promote the actual detail. You need to promote the gaps that are kind of 5 years out in middle to senior management. You need to show that there's an opportunity to progress, but you're not promising a role to anyone. They have to earn it. And really, that's what people want. They just want an opportunity to prove themselves and get the job that they covet. So these, the skills here are what we're seeing as kind of the most in demand. We're seeing kind of the changing role of corporate IT. Data security is kind of the top of the mind if you're on a board of director. If you are in IT or marketing, you're seeing those skills start to overlap kind of considerably. And cybersecurity is becoming the kind of the fastest growing sector. Skills that are kind of spitting out of the bottom of these needs are your mobile application developers, general application developers, security experts, and even ethical hackers. It's being driven all by the fact that mobile use is surpassing computer use, and that you're seeing lots of high-profile data breaches happening around the world and into Canada as well. We've got a lot of U.S. companies trying to exploit our low Canadian dollar. We're seeing a lot of infrastructure heading to Canada. And then multi-platform development is, again, that app dev, mobile development kind of driving force. Now, I'll talk a little bit about the skill shortage, as it's something that's real, and it's having an incredibly negative impact on a lot of companies. We asked the question, the exact same question the last 3 years. What are the main challenges your recruitment plans face for the coming year? And for the first 2 years, the key challenges were a skill shortage, which makes sense, and then increasing salary levels. But when we asked the question for 2016, things seem to be changing. Over 50% of employers still say that the skill shortage and salary levels are a challenge, but we're now seeing that company reputation and the level of a company's profile is starting to come to the forefront. So in other words, we are having problems hiring because we don't have a high enough profile or awareness, at least, amongst the pool of candidates that we're targeting. So why would this be a problem now, but not so much in the past? And my personal belief is that employers are becoming aware of all the noise out there in the media in general. So whether it's news or sports or social media or networking or job boards, there's so much noise about jobs, but how do they make themselves heard? And the fact that companies are even thinking about this and recognizing this as a problem is showing that progress is being made, but now they need to fix it. And it's a topic that honestly we could deliver a webinar in itself on. And if you do want to talk about how to develop your own kind of digital recruitment salary, drop me an email, and I'd be more than pleased to have a chat with you about it. So how about attracting new people or new entries to your industry or organization? We asked what you felt was the main reason for fewer people entering your industry, and I want to pull out a few of the answers that I feel are connected. So about 30% say it's about a lack of awareness, and the awareness can be at grade school or at college levels, and then you've got 22% saying that the problem is the perception that people have of the industry and the stereotype that working in IT kind of typically carries, or at least has carried. Now, in my mind, this is all the same thing. It's the profile, it's the awareness, and it's the communication of the correct message that you need to get right. So we asked people who are responsible for sorting this out, and 40% that the responsibility lies with the employers themselves, which I feel is encouraging. It's a lot better than saying it's someone else's problem. At least we're taking some ownership over the issue. But how do you raise the profile of your organization? I heard last year that the Manufacturing Association in Ontario, they actually got a group of employers together and decided to raise the industry's profile through schools, colleges, and online, kind of a collective campaign together. That was a lot of work, but I think it's worth it. I'm sure it's tied to the Canadian dollar, but we're seeing manufacturing grow this year more than any other year that we have since we've started this survey. Increasing awareness is it's a medium to long-term strategy to solve your recruitment plans, but as we just saw, it's an absolutely essential element of it that you need to get started on now. So that means you'll have to be able to work in advance and build that awareness over time so that when the time is right, you can start hiring. Now, it's easier said than done, and it's hard to make a decision to invest time for 6 months to a year just building the awareness when the resource is scarce. And it's a fair point, but when you look at the fact that it takes 2 to 6 months to fill a niche job role, then perhaps the time would actually be better invested up front. Now, if you add to this that even though the economy didn't move forward last year, we've got 25% of people saying it is harder to recruit now than compared to a year ago. I mean, what's going to happen when the economy does move forward? So we asked, what are your biggest obstacles to improving your hiring processes? And 67% said it was simply a lack of internal resources. And this rings true and through for kind of what we hear every day from our clients. Sourcing the key skill sets is hard, and it's due to a lack of resources in their own organization. It takes a lot longer to find and secure a qualified mobile developer than it ever has before. Now, I'll leave this topic kind of with this thought, that 50% of employers say that they experience large to extremely large amounts of pressure on their workload when recruiting. So another reason to argue or to invest in a long-term recruitment strategy is for your own well-being. And again, I'm happy to talk about this more offline if anyone's interested. So how is it affecting salary levels? We asked each year how much salaries were increased by in the previous year, and we've shown this from 2012, and then what are the plans for 2016? The trend here is quite simple. More and more we see a move towards less than 3%, and now 70% of companies are planning on that offering for 2016. Now, increases of more than 3% on your earnings are becoming rare, and only about 25% of companies are doing that now. If employers are expecting business levels to increase and they're not planning on adding many more people, this is why kind of the trend of more conservative salary increases is coming to fruition. So we believe that this is the view on the economy in general coming home to roost. The economy isn't awesome, but our businesses will be fine. I won't add more people, and I also won't be increasing salary levels. It's kind of a cautious optimism, but an optimism that doesn't actually translate into investment. You can see that for IT employers, it's a very similar picture, and they're predicting more of the same to come in 2016. If we look at it a little closer by industry, construction is the most aggressive at almost half of employers offering over the 3% mark. And then manufacturing, where we know margins are always very tight and the dollar is kind of unpredictable, they're being the most conservative with only 28% offering over 3%. Let's have a look at how this varies by a functional area within a company. So based on this, the functional area that will be treated the most fiscally prudent is procurement, probably expected. And I suppose that makes sense because if you're practicing what you preach, then you really want to see a minimal increase in your procurement spend within your actual procurement department. The least conservative is HR, with almost half getting an increase of more than 3%. I suspect there was a large proportion of HR professionals actually filling in the survey, so it might be wishful thinking on their behalf, but who knows? IT stands out too with a more aggressive approach, which makes sense due to, again, the skill shortages we've talked about today and kind of the growth in certain areas like app dev and mobile dev that's driving up salaries. Office professionals and admin staff, unfortunately, have the highest proportion saying there'll be 0 increases, which seems a little harsh, but that's the data. When you talk about planned salary increases, and bring it down, it comes down to 1%, I think it kind of misses the point in a way. It may make sense that in some instances in an organization there is a significant salary increases, and in others there is none. Now I know that can be a controversial thing to say, but I believe it makes sense. what I really mean is, are there areas where you need to increase salaries and others where there aren't? For example, niche skills or seniority. We asked about the willingness to alter salary levels to attract top talent. 18% already have, 3% plan to, and almost 40% say that they would consider it. We asked, where are you feeling the most wage pressure? And it's in that mid to senior management level, with more than 60% saying they feel some to an excessive amount of pressure. So anyway, if this is the case, then it makes sense to treat niche skill sets or top talent and certain management roles separately when it comes to figuring out what you're going to do with salary levels. But it is important to kind of take a look at your whole salary plan as a whole. If activities do increase and skill shortages continue to be a problem, it's something that's going to affect and likely drip outside of your niche areas as well. So a final point on this topic, and I'm not sure you want to hear it, but 61% of employers said that they expect to receive a salary increase in 2016, despite the fact that 60% of employees said they have not received one in the last 6 to 12 months. So hire managers, you're getting a raise. Everyone else, keep working to get to that level. Quick look at the benefits. In construction, you're seeing a lot of performance-related bonuses, manufacturing, flexible hours. Makes sense. There's a lot of kind of shift work that's happening. Extended benefits are becoming more popular, which is great. It's really that kind of like the Facebook and Amazon making your work experience something cool and something to brag about that we're seeing drip through there. Resources and mining, the ability to work from home. Not everybody actually needs to be, of course, on the mine site. Some key findings, and lastly, some recommendations from this the survey itself. Confidence in the economy is tempered. Employers in regions outside of Alberta are optimistic for future business activity. This is converting into steady year-on-year hiring plans. Pressure on existing staff is getting worse. Skill shortages in specific areas are still clearly present. Salary increases of 3% or greater persist, but however, employers are kind of willing to alter compensation to get the right talent. And recruitment is definitely evolving and presenting kind of many new challenges. So the recommendations that we'll make to you off the back of that is you need to look at attracting and retaining staff by developing and promoting your succession plan. You need to build a talent pipeline today, even if you're not recruiting. You should be developing and broadcasting your employer value proposition. You need to invest in the future by bringing in more junior staff to support the existing workforce. And you need to protect your own people assets through better engagement. And it's communicating timelines for salary increases and getting those succession plans kind of moving forward. Okay, that's it for the key messages that we wanted to share today. Thank you very much for dialing in and listening. I hope you found it useful and that you got at least one or two constructive ideas from it. We now have a couple of minutes of time to spare, and we're willing to kind of answer any questions that you have. So if you do have a question, please just type it into the box there, and we'll do our best to get to it. While we're waiting for the questions, it would be an okay time if you wanted to request a full copy of the guide or the report. Please go online to hayes.ca/salary guide, and there will also be a recording of this webinar available on our YouTube channel. So, okay, let's see if we have any questions coming in. Okay, we've got one coming in now. Just give me a moment. When will the salary guide be available for 2016? If you go online and request it now, a Hayes consultant would be pleased to bring one out to you. They're actually available at some point next week. Let's see. How is the oil and gas downturn affecting the IT market? And what advice would you give to employers around recruitment or retention in these areas? Great question. I've got Alyssa Monk on the line today. I believe Alyssa's here. Alyssa
yes,
heads up the recruitment business in Alberta, so she is the closest to the oil and gas movement. And Alyssa, how would you answer that?
Okay, so it's definitely no secret that Alberta has been definitely affected by the oil and gas downturn. It has affected more industries than just the oil and gas side of things. We have seen some downward pressure in terms of rates for contractors and for certain types of permanent IT staff as well. The areas that we've, I guess, found the downward pressure on is positions that are involved in projects, so project managers, business analysts. There's definitely been more of them on the market due to projects being put on hold. So for those people out of work, flexibility, I think, on salary expectations is required at the moment. That being said, though, there are still niche skills that are definitely still in demand here in Alberta. Some suggestions of those Maximo developers are still sought after, operational security specialists. We're definitely seeing an increase in full stack developers. Web development at the moment, we are seeing more of a trend for that being outsourced to marketing agencies, so definitely more opportunities on the web development side there. And SharePoint developers are still in need as well. So yes, there's been a downturn, but there's definitely still some key areas that are in demand. One of the other things as well, I think obviously with layoffs, the existing staff are expected to cover more ground, and therefore developers at the moment we're seeing pressure to take on more BA type duties, which obviously has meant that these developers have had to step up, maybe a little uncomfortable with it, so definitely some more support needed from employers on that side of things. Hopefully that answers that part of the question. Regarding the advice that we would give employers in Alberta at the moment to deal with retention, I think the #1 concern that we have from candidates coming in to meet with us that are still employed is really down to uncertainty, and therefore from an employer point of view, transparency I think is #1. Let your staff know as much information as they can about what's going on within the company and why the changes are happening, and I genuinely feel that you will get better retention and more engagement from the people that you are employing as a result of that. For people that you are laying off, definitely make sure that you're treating them with the utmost respect. Do what you can in terms of trying to help them find alternative employment. It definitely goes down with the employee and can give you some good publicity when things start to increase. We have seen some companies lay off that mid-level management tier, and I think in IT sometimes that can be a little bit of a mistake. Your good managers, those like mid-level managers that are still quite hands-on, they will be the most valuable to basically help retain staff and keep morale up. So through hard times, it's important to have those people in the business, and obviously to rebuild the business, you're going to need those people. So try and think long-term about layoffs, not short-term. And obviously with lesser amounts of staff, team morale can sometimes be hit due to the productivity that's expected out of the existing people. Try and make sure that you're doing things to incentivize or increase the morale, and that doesn't even need to be a monetary incentive. Even just good recognition, and you know, it could be time off, it could just be a pat on the back, but definitely those types of recognition go down very well and will definitely keep morale a little higher at this present time.
Great. Thanks, Alyssa. I think that that definitely covered the question. Got another one coming in here. How do you see these numbers stack up to our neighbors to the south? Do you think that skilled workers will be coming to or leaving Canada to find work? I'll answer this one kind of in two parts. One, how do these numbers stack up to our neighbors to the south? Actually, if you'd like to send me an email or a LinkedIn connection offline, I'd be happy to give you the exact data from our neighbors to the south, as we've done a similar exercise in the U.S. with our American business. And do you think that skilled workers will be coming to or leaving Canada to find work? Yes. Yes is the answer, and we're definitely seeing some American companies begin to target the recruitment talent available in Canada, and it's almost going two ways. So via the North American Free Trade Agreement, or NAFTA, IT workers are able to, with almost relative ease, accept contract assignments in the U.S. And as our oil and gas has kind of been turning down, all of the shale work that we're seeing in the U.S. has been turning up. And when $1 American dollar can purchase, almost 1.3 Canadian dollars, American firms are learning very quickly that you're able to get excellent skilled work from Canada with perfect communication skills to come down to the U.S., and if they're able to find ways to pay them in Canadian dollars, there's a significant savings that's becoming available there, which leads me into the next point. We're actually now seeing a lot of what we call as nearshoring, where American companies are just sending the projects to Canada. We've got a lot of individuals who are working remotely here with their American colleagues. They're paid in Canadian dollars, which again is driving further cost savings to the American businesses. So I think we're going to see, in general, kind of a lot of Canadians working on American projects, some on-site and some remote from Canada. Hope that answered that question for you. Let's see what else we got here. How open are Canadian IT employers in recruiting immigrants in 2016? Does general recruitment plans also apply for immigrants? I would say absolutely yes. More and more, the backbone of Canadian IT and addressing the skills shortage is becoming attracting talent from all areas around the world. So whether it's new Canadians, current Canadians, we all need to band together to address the skills shortage. And there's so much talent available in all corners of the world that absolutely, I would assume that every employer is looking at that avenue because, why wouldn't you? We got one more question here. What are the skills needed that are in demand in computer networking? A couple, I'd say. We mentioned earlier how security is becoming more prevalent. So anyone who's got, CCIE security would be a huge positive. If you're getting into any firewall work specifically at a lower level, that's going to be great. And then with the emergence of VoIP, or at least soft phones, anything in the CCVP or in the voice space itself is a place where I would be investing my experience. Now, you want to try and be as on-site as you can and as hands-on, because the network analyst or the network support role that was traditionally held on a local basis, more and more I'm seeing those roles end up in other countries where labor may be more cost-effective. So I would try and be, again, more hands-on with an IT security, or if you're doing the VoIP, make sure you're doing installs, not just support. We've got one more question on a prediction for government IT spend. You're not alone in wondering this. I think everybody is wondering, but we can almost make a safe assumption that with the new Prime Minister in town and the amount of money that he's promised the nation in terms of infrastructure growth, that without a doubt a large portion of that will end up trickling into IT. So it's definitely exciting for Canada, it's exciting for everyone on the call, but there's actually no figures yet for what we think the infrastructure investment will come to in terms of dollars and cents for IT workers. I think that just about addresses all of our questions. If anything else comes up, I encourage you again, send an email. My address is on the screen there. It's travis.o'rourke@hayes.com. But most importantly, please make sure you take the time to visit hays.ca/salary guide, as we were only able to touch on a few of the topics today, and there's a ton of excellent content still available within that guide. Thank you very much for joining us today. We hope we've taught everybody a little bit of something, and look forward to working with each of you in the future. Take care.